dear friends, welcome back. Let's delve into the impact of microfinance on poverty alleviation. Poverty remains a significant challenge in emerging countries like India. Despite substantial economic growth, many still live below the poverty line, struggling for basic needs like food, housing, and even healthcare. Enter microfinance, a potential solution offering financial services to low-income individuals excluding from traditional banking. This video explores how microfinance aids in poverty alleviation in India, showcasing its impact on economic growth, women's empowerment, and overall poverty reduction. Microfinance provides financial services, microcredit, savings, insurance, and money transfers to those typically excluded from conventional banking due to their low income status. The premise is simple. Small amounts of money, when managed well, can significantly elevate poverty. Traditional banks often fail to serve rural and semi-urban communities. Microfinance institutions target these areas, aiming for financial inclusion. Women particularly benefit from microfinance as many programs focus on self-help group (SHGs), where women collectively seek credit and improve their economic standing. The roots of microfinance in India trace back to 1970s with groups like Seva in Gujarat. However, the sector saw significant growth in the 1990s with NABARD's SHGs bank linking program, connecting informal SHGs with formal banks to enhance financial inclusion. Since 2000, microfinance has expanded rapidly, led by institutions like SKS Microfinance, now called as Bharat Financial Inclusion, and Bandhan Bank. Initially driven by NGOs, the sector now includes non-banking financial companies, NBFCs, cooperatives, and the banks. Microfinance enables entrepreneurship, reducing poverty through economic empowerment. Small businesses in rural areas often rely on microloans for initial funding. Women like Meera use these loans to start tailoring, textile production, dairy farming, or even small retail shops, thereby improving their families' financial conditions. One of the most important significant impacts of microfinance in India is women empowerment. Historically, rural women had limited economic opportunities. Microfinance initiatives like SHGs have changed this narrative, allowing women to obtain credit, save money, and become entrepreneurs. Financial independence often translates to greater decision-making power within households, better health and education outcomes for their children, and reduce gender disparities. For instance, Bandhan Bank focuses on empowering women through microcredits, lending to significant improvements in their economic and social status. Rural India often faces seasonal unemployment and reliance on monsoon agriculture. Microfinance helps by offering income diversification opportunities. Farmers use loans to fund non-agricultural activities like poultry farming, fisheries, or even agro-processing, and reducing income volatility and poverty. Self-help groups promote social cohesion through collective action. The Kutumbashri program in Kerala, one of the India's largest women-focused microfinance programs, exemplifies this. SHGs foster peer support, consistent saving practices, and a support network during financial crisis. Despite all these benefits, microfinance in India faces a lot of challenges. Over-indebtedness due to multiple loans from different MFIs can lead to unmanageable debt. The Andhra Pradesh microfinance crisis of 2010 highlighted issues like aggressive lending practices and borrower defaults, eroding public trust. High interest rates are another concern. Due to high operational costs and small loan amounts, MFIs charge interest rates between 20 to 30%, which, though lower than informal lenders, can still burden the borrowers. Additionally, many borrowers lack financial literacy, lending to poor understanding of loan terms and potential debt traps. The regulatory framework of microfinance in India is fragmented. While the Reserve Bank of India has set guidelines for NBFC MFIs, inconsistencies across different types of institutions hinder sector growth and efficiency. Despite of all these challenges, successful models demonstrate microfinance potential. Bandhan Bank, initially an MFI, focuses on women borrowers and rural areas, uplifting millions from poverty. The Kutumbashri program mobilizes women's SHGs for poverty eradication, and SKDRDP in Karnataka combines microfinance with social initiatives for sustainable rural development. In conclusion, microfinance has proven to be a powerful tool in the fight against poverty, especially in countries like India. By providing financial services to underserved communities, it promotes entrepreneurship, economic independence, and social empowerment. Women, in particular, have greatly benefited from microfinance, gaining financial autonomy and improving their family's well-being. Programs like Bandhan Bank, Kutumbashri, and SKDRDP have shown that when implemented effectively, microfinance can uplift entire communities. However, challenges such as over-indebtedness, high interest rates, and regulatory inconsistencies still pose some risks. To maximize its potential, it is essential to address these issues while promoting financial literacy and responsible lending practices. Ultimately, microfinance remains a key driver for sustainable development, economic growth, and poverty reduction. Its transformatory impact is undeniable, but continuous improvements are very much necessary to ensure it reaches its successful potential. Thank you for joining me in exploring the impact of microfinance on poverty alleviation. I hope you found this session insightful and gained a deeper understanding of how financial inclusion can transform lives. Stay tuned for our next session, where we will dive deeper into another exciting topic. Until then, keep learning, stay engaged, and see you next time.